Hello traders, tradingwithbill.com. Welcome. My name is Bill and we are going to take a look at what's going on a Wednesday, last trading day of the month, hump day in our trading week. Non-farm payrolls on Friday. Tomorrow we'll see what happens, and let's take a look at what's happening right now. Indices, S&P 500 futures up 0.07%, NASDAQ futures up 0.15%, Dow negative 0.24%, S&P 500 up 5.81%, DAX down 0.24%, US dollar index is up 0.14%, Euro index is negative 0.06%. Let's take a look at commodities. Let's see what's going on with oil. So WTI is at 49.50. Brent is above the 50 mark at 52.10, and U.S. coffee is up 0.61%. Let's see what's going on the old calendar today. So earlier today we had oh gosh, what do we have? Not much. Okay, so China had manufacturing PMI, came out good, 51.2 versus 51.0. The Aussie had private sector credit 0.4, 0.4 expected. Previous was 0.3. So the euro today has some CPI out of the French, and German unemployment change today in the European session, about 55 minutes after the London Open. German unemployment rate, nothing really out of the pound of any significance. We do have, Euro has CPI today year on year. GDP out of Canada today, month on month. We have some speakers out of the ECB's talking today. Pending home sales out of the U.S. today. That'll be the big one. And we have, not that it's big, but the Dallas Fed Services revenues comes in today. So we'll see how it goes. So that's what's going on that side of the calendar. Let's take a look at some charts, my friends. Let's get over to the chart of the day, and that is our Great British Pound U.S. dollar. Remember, we are bearish, bias bearish. This is to the downside. So, you know, we're looking at this, and I just want this to come back up to that 38.2 Fibonacci level that you can see on the chart. We want to get in this with a 1.2874 zone, right? Anytime I put a number on a chart, remember that's a zone. It's not. We're not going to wait for that specific hit to that specific number, but we need that zone to break and give us a bearish candlestick formation. We can take it to the downside. We're going to get out at 1.2790. So this is like an 85 pip trade, depending on where you get in. The problem is we have a lot of junk left of the chart. This has to break these EMAs. The red line, the 20 exponential moving average, is pointing to the downside. The 5 is just starting to curl a little bit to the upside. So we'll see what happens here. This looks like this is going to be probably a late trade. This looks like London, and maybe even late into London before we get into this. So that's what's going on with our Great British Pound today. Let's take a look at our Euro trade. This has not really done anything other than stop me out. But it's okay because it was only like 13 or 14 pip stop. I wasn't putting a tight leash on it, and basically this candle right here stopped me out, this blue candle. And is that right? Yes, that candle stopped me out, and then I put this trend line in here after the fact, thinking that this would break the trend line to the downside, retest, and I can sell it again. What does it do? It goes up a notch and then heads sideways till Asia this morning, and basically has done nothing. So this trade plan is still in effect. I'm still wanting to get in it. I'm not abandoning the trade plan. The trade plan's working, and we're just going to wait, okay? But this wide open space is what I want to get into, right? We want this to break, get below this 1114 area, and just take this to the downside. This is going to be really nice once we get that break to the downside in this zone. You know, with this wide open space, nothing left of the chart. It's going to be smooth sailing, and that's what we're waiting for. All right, let's take a look at New Zealand. I manually stopped myself out of the New Zealand dollar. It just wasn't it wasn't working, and I said, you know what, we're out of there. Sorry, I took the fib off already. I would have shown you where that is. What I wanted to talk to you about is the exponential moving averages. Now, the red one is a 20 exponential moving average, and the light brown one is a 5 exponential moving average. And of course, the thick green one, as you know, is the 200. So we can see we have some angle and separation to the upside. There's the 20, and this brown line, the light one, is the 5 exponential moving average. They're both to the upside at this level, and there's a lot of separation between them. That tells you, folks, this pair is not ready to go to the downside, at least not in the near future. So what are we going to do? We're just going to wait. I'm not necessarily going to wait for a cross to the downside before I enter the trade. In fact, I might not even listen to the EMAs at all once they get to close together and they start working with each other. As long as there's angle and separation like this, you don't want to stay in a trade because there's a good chance you're going to get stopped out if it's going against you. That angle and separation is important. That's telling you that momentum there is moving to the upside. And as you take a look at this New Zealand dollar, this has had an uptick here, right? This has moved up here a little bit, right? And I don't necessarily right. So this is moving to the upside here, and that's all right. But I'm biased bearish, right? I want to sell this. My friends. I have no intentions of buying the New Zealand dollar. So we'll just wait. We'll be patient. The trade plan's still in effect. I'll wait for a break of that trend line, and we'll look to get in. All right, that's the New Zealand dollar. Traders, thanks so much for being with me on a Wednesday hump day. And by the way, beautiful skies today in Thailand. Blue, some white puffy clouds out there. Hopefully get some nice weather today. Traders, take care. We'll catch you tomorrow. Remember, this is tradingwithbill.com. And always remember to trade smart and not hard. Take care, my friends. See you now. Bye-bye.